Good evening, XRP Future Millionaire here, and it's 58 minutes after the daily close. It's 7:58 p.m. Eastern Standard Time on the East Coast in the United States of America. I want to thank you guys for tuning in. I have a bunch of stuff here today with us. First, I want to start off on a little bit on the charts. We'll go touch base on what I want to read to you, and then we'll come back to the charts. So I want to start with DGB real quick so we can see which areas we're trading in. I hope you guys like this new view that I've brought to you the last couple days. This is here to stay. I did buy a tablet if you're wondering why it looks so much better than it used to and why we're able to see the charts in all capacities. So let me go back into the 30 minutes so you guys can see what's going on in the short term here. Let me just get this a little bit smaller, bring it out a little bit wider. Okay. So we're still trading between the 3305 support and 3646 resistance. Nothing's changed. I mean, nothing. The only thing we should do here is probably put the 30-minute time frame. It should be out there. I don't know why it's not. But this hasn't changed. So as long as we're on the top side of this, maybe we can make some momentum, you know, and then we'd have to get on the top side of here, obviously. But right now, the volume's, you know, decidedly come down. It's like that across the board. So, I mean, I'd be surprised if it just pulled down and did that. I would think it'd be more likely that maybe it'd come up here and get rejected and do something like that. If it was going to finally get rejected, like, oh, we're going to have a sideways and up and then. But right now, we did the standard V. We're using it as support, so I don't see any reason why it can't come up and retest that area. The 1 hour time frame, yeah, it's about where we got rejected, probably the 45. Yeah, we're right there. We're trying to be supported by the 45-minute time frame, as you can see right there. Let me get some of this other stuff out of the way. So that's what we're looking at with DGB. So let's see if we can hold the 45 and make it over the 3646. If not, we're going to come back down to the 30-minute time frame, and then we'll ultimately know if this doesn't hold at 3467, we're bearish. So this is a good spot here to indicate what's going on. Our price volume trend isn't doing anything. Nothing to see here, it says. Let me spread it out. Say that's a little indifferent, if I'm being honest. I only say that because the average price or the average volume coming in is decreasing as we're going up until we got to this little spike here. But initially on this push up, yeah, there's even less volume here than there was back here in the same zone. So it's going to be tough. It's going to be tough for this to break out of these areas. Let's go back. XLM. It's the same deal as what we've seen with DGB. Being supported right there at 26.9. We've got low support at 24.7, but right now 26.9 is supporting us right now. So we're going to see how that plays out. We got the 200-day and the 30-minute just below us, as you can see over here. Whoops, the red right there. So, I mean, we're going to decide. You're going to see it's either going to ride this and bounce up, or when it's browning this, you're going to finally see it bounce on this, come down, probably use this as resistance, and then come into here and further. So there's two scenarios here. So let's see if this can bounce up into here. But what we need to do here is we need to get up into the 4 hour time frame. We're going to have to get up towards about 306, roughly 308. Get top side of that 3009 and compete for 316 is what it's looking for with XLM. XRP. We had a close on XRP. We're up 70-something cents right now, but we had a close just over 82.5 cents. Bitcoin was just under 49,000. So with XRP, it's kind of the same thing it is the same thing we're talking about with the rest of them. There's nothing different. In the 30-minute time frame, you can see the same thing. We're either going to push up and get rejected by this blue line or the 85.196, which isn't even a proper support resistance, just the mid zone. But 88.3 is the resistance in this level. We've got support below us at 81.517, which is the 30-minute time frame and the 200-day. So we're going to see how it plays out. If we fall below that at 76.179, if we break up, our next level is 88 and then 98. We've got 95. We've got our 93.8, which was our high in the last push up. So that's what I wanted to see on the chart. Actually, you know what? One more thing on the chart. While I have the charts out. We got XDC. XDC had a nice break, and we talked about that 6-7 line. If it could hold that 6-7 line and not come down to this next level, we can make a real nice bounce up there, back up to the 4-hour time frame, and that's exactly what we did. Now we're going to see if we get rejected by it because it's being pulled down by it, but this is the exact scenario we played out. So anybody who's in this, you've got resistance at 842. If it doesn't hold this, you're going to come back down to 713 probably pretty swiftly, especially if 781 doesn't hold. You don't really want to be out of this area. To feel good, if you're in this, you want to be trading between this area. You don't want to see it come into here because then that just leads to this. So it's as simple as that. So you got low support at 713, mid support at 7816. The resistance in the zone just happens to be at the 4-hour time frame that it's hitting perfectly, which will keep this on the bearish side if it decides to roll over. If it decides to get a burst and break up, well, it's going to look very good because we got about another 20% clear. So that's what I'm seeing. And then what? Bitcoin we could talk about for a sec. Bitcoin's at the 48,879 support resistance area, which it's not even there. I just moved it earlier for everybody so we could see the... Yeah, it's close enough. But that's exactly where we moved it so that we could see the different time frames. So if we're in the 30-minute, you can see we're being support resistance. So this is a decent spot. We're going to see if we can maintain it. If not, we'll just come back through. But if we can hold this area, we're going to make a run up to 49,993. The key's 50,675. If you see it break that, then we can make a run at 53,574, which is in the 200-day 4-hour time frame. The moving average is up there. So that's why that becomes interesting, that 53,574. So other than that, that's about all I want to show you on the charts. But before I leave, I want to go into this real quick. So make sure to hit that like button. Consider joining Tom's Army. $9.99 a month to get the exclusive Telegram, to get the exclusive content in the members only area, and to get the exclusive badges. Helps me continue to do this free of charge. I like to do this for everybody to see. And it's from the generosity, and there's 179 members of Tom's Army, so I greatly appreciate each and every one of you. Ripple price analysis. XRP trapped around 80 cents as bulls unable to find momentum. Key support level 75 cents, 70 cents. Key resistance levels 89 cents, $1. XRP is approaching the support at 75 cents, attempting higher to move up. Higher was rejected. While the trend remains flat for XRP, it appears that the price is being condensed in the current structure and may push it to attempt a major breakout. Ideally, the price should try to escape from this range so that momentum and volatility can return to XRP. Until then, the resistance at 89 cents will continue to pose a major challenge for bulls. Technical indicators. The volume has remained flat in the past few days, with XRP cannot bring sufficient momentum to break away from the current price range. RSI, the daily RSI is making higher lows, which is a bullish signal. The RSI has to move above 50 points, as staying just above the oversold area is not a sign of strength. MACD, the daily MACD is very close to completing a bullish crossover. However, the current market conditions may postpone this, as both Ethereum and Bitcoin appear bearish at the time of this post, which it's come up a tiny bit since this post. While there are some hints of bullishness, XRP appears stuck in a flat trend. So far, the support level at 75 is held well, and it has again. It may be retested again before a major move can take place. So that's what we're seeing here. And then we've got Fed could raise. Fed shifts in. So the Fed's shift to inflation battle winding down pandemic support. With the economy healing but price gains pinching, consumers officials are dialing back bond purchasing, getting in position to raise interest rates. 3 are possible next year. I think the risk of higher inflation has increased, Jerome Powell, the Federal Reserve Chair, said while testifying before Congress last month. So here's what we have to say today from 7 p.m. So this is just about an hour ago. And this is the New York Times. So Gina Smialek. Federal Reserve policymakers moved into inflation-fighting mode on Wednesday, saying they would cut back more quickly on their pandemic-era stimulus at a moment of rising prices and strong economic growth, capping a challenging year with a policy shift that could usher in higher interest rates in 2022. The central bank's policy statement set up a more rapid end-of-the-monthly bond buying program that the Fed has been using throughout the pandemic to keep money chugging through markets and to bolster growth. A fresh set of economic projections released on Wednesday showed that officials expect to raise interest rates, which are now set near zero, 3 times next year. Economic developments and changes in the outlook warrant this evolution. Jerome H. Powell, the Fed chair, said of the decision to pull back on bond purchases more quickly. by tapering off its bonds, buying faster, the Fed is doing less to stimulate the economy with each passing month and putting the program on track to end completely in March. That would place Fed policymakers in a position to raise interest rates, their more traditional and more powerful tool, sooner. The Fed has made clear it wants to end its bond buying program before it raises rates, and which would cool off demand by making it more expensive to borrow for a home, a car, or expanding a business. That would in turn weigh on growth and eventually price gains. The Fed's new economic projections suggest rates, which have been at rock bottom since March 2020, might rise to 2.1% by the end of 2024. So this is what we can see. Current Fed projections. Federal Reserve officials think rates should be end of 2022. So they're saying 2.25% by the end of 2023. We'll get a rise. And they say by the end of 2023, you see how we raised. This is just from September. We raised from 1.65 to 2.12%. And our current target's 0.25%. It's going to be brutal. The Fed's final meeting of the year completed its decisive shift away from providing full blast support to the economy and toward guarding against the risk of rapid and lasting inflation, while officials spent much of the year laying out a patient path for weaning the economy off the Fed's pandemic support. They have become more worried that a burst in prices this year could linger, resulting in a more proactive stance. So what to know about the inflation in the U.S.? The Fed's pivot. Jerome Powell's abrupt change of course moved the central bank into inflation-fighting mode, fastest inflation in decades. The consumer price index rose 6.8% in November from a year earlier, its sharpest increase since 1982. Why Washington is worried? Policymakers are acknowledging that price increases have been proving more persistent than expected. Who's to blame for rising prices? Here are the most obvious candidates, so you can go look into that. And then the psychology of inflation. Americans are flush with cash and jobs, but they also think the economy is also awful. That's because we were given stimulus. Nobody actually earned the money. Central bank officials who are supposed to maintain price stability and foster full employment have also been encouraged by strengthening in the job market. In my view, we are making rapid progress toward maximum employment, Mr. Powell said in his remarks. Fed officials estimated in their new economic projections that the unemployment rate would return to its pre-pandemic level of 3.5% by the end of 2022, sooner than they had previously forecasted. Still, inflation has been higher and broader and has lasted longer than policymakers had anticipated. Consumer prices climbed 6.8% in November from a year earlier, the quickest pace of increase since 1982. The Fed's preferred inflation gauge has shown slightly slower gains, but has also moved up sharply. Some economists have warned that the blah blah variant of the blah blah would allow elevated inflation to linger if it's further disrupts supply chains and causes factories to shut down for periods of time. Mr. Powell on Wednesday acknowledged that the spreading blah was a risk that contributed to economic uncertainty. The rise in blah cases in recent weeks, along with the emergence of the blah variant, pose risks to the outlook, he said. The Fed chair said that a quicker conclusion to bond buying, which officials first announced they would slow following their November meeting, would put policymakers in a position to react to a range of possible economic outcomes next year, and asked if there would be a big gap between when bond buying ended and when rate increases began, as there was during the last economic rebound. Mr. Powell said the situation was different this time. The economy is so much stronger now, Mr. Powell said later, adding that there would be the need for that kind of long delay. Mr. Powell's public shift to sounding more concerned about inflation came shortly after President Biden announced on November 22nd that he would appoint him to a second term as chair, saying he believed Mr. Powell would focus on both the need to control inflation and fostering a strong economy that creates jobs and pushes wages higher. That timing fueled speculation about whether Mr. Powell turned toward fighting inflation and putting less primacy on keeping borrowing cheap once he had secured reappointment, or that his reappointment gave him a new mandate to act more boldly, knowing he would be able to carry the plan. So, and then I just wanted to read this last part. But Mr. Powell batted back that idea on Wednesday, providing a detailed look at his own evolution and thinking about inflation and the data. Okay, I don't care about his own evolution. So you guys got the main details. We're not going to read the FUD. That's what we do here. We cut out the FUD. I don't want to read it. You don't want to read it. I don't care for it. So Real quick, I want to do something for Sniper and then I'm out. RMRK, Sniper, you can see we've had a little bit of a push in between our support resistance areas, nothing major. If we bring it out into the 30-minute time frame, we got rejected so far by 45.25, so everything's looking good. We've got low support at 38.29, but if we break out of here, our next move up, we've got $50.90, Sniper. So I'd be looking to see if 45.25 carries out as resistance. And if it does, look at your next support level at $38.29. We got 32.75 and 28.38 below that. And then for SDN, same thing. We came through after coming down here. So we've got a new support level down here. But if we want to go down farther, we talked about this. Sniper, I know you were asking me if these wanted to go down a little bit farther. Right now is not really the time to be thinking, oh, they're just going to go down. But if we do make a push down past $1.50, there's an area in this, where was it at? If we break down farther, hold on. Okay, so we have a chance if we break down and consistently come through this 150 with the length, how far we were. I was saying like $1.36, $1.37. But I don't know how much farther this is going to go down. We don't have any history down here. We don't have any history with any of this. So I would be looking right now. We've got our support. Let's bring it back into the 30-minute time frame. We're getting bounced off the 100 days. So we've got support at $1.58, resistance at $1.70. So just look at that. If it breaks that 178, the resistance higher up. The support lower is $1.50. Stay blessed, everybody.